Warning, it's happening again. In this one simple pattern, it's going to tell us whether we pass or fail. Please know, stocks are very red. We've been fearful for a year, a month, a week, and yesterday. But 500 years of history, it says this might not be it. This head and shoulders pattern, this is only negative 30. If 500 years of history are correct, we could be going a lot lower. How much lower? Watch today's video and you will find out. So far this year, we are down by 10% on the S&P 500. But how could history repeat itself? And how could that be very scary? Well, right now, strategists are cutting their targets at the fastest pace going back to 2020 and the P word. Oh no, that's right. And there are 5 signs the US and China could be going to war. We talked about this in previous videos. I'm just going to push forward. The most important thing for this week is that the first shockwaves from Trump's tariffs are about to hit the world economy. And people are feeling a little bit uncertain. The worst word for the stock market. Look at that. When Moon, when Mars, well, man, it's going up fast. That does not look good. No, it doesn't. And this is where what Ray Dalio tells us, going back 500 years, or the big cycle in a nutshell, we have to look all the way back to the 1500s. I was not alive in the 1500s. I'm not a vampire, but history is repeating itself. Look, influenza, war, influenza, war, influenza, war. What was that? Influenza 19. That's right. So this big cycle seems really important. Yes, it is. We can see how we go through the rise, the top, and the decline. But I want to leave you with actionable stuff today because honestly, like 500 years of history is like way over my head. This is it in a nutshell. There's the end of the old world and the beginning of the new one. And might be having a heart attack in the next 3 years. Thanks, Ray. Well, maybe it's time to jump on the treadmill and get a couple of pounds off because people have been humbled so far this year. Goldman Sachs, Societe Generale, RBC, Yardeni Research, because they did not forecast how bad these tariffs would be. Yeah, they're bad. So some people are selling first, asking questions later. And what is this death cross? Does it mean there's more pain ahead? We talked about that earlier in the week. What I want to focus on today is actually what Jerome said. He told us that we will be moving away from our goals for the balance of the year. Perhaps we can resume next year. Man, next year, that's 2026. That's like a really long time from now. Yes, it is. So if your time is very valuable, which it is, pause the video right now. Here are the key takeaways for today, which is going to mean Monday, for the week, and for the month. It's basically bearish until proven otherwise on the 1 day, on the 1 week, and on the 1 month. Let me make this really simple here. On the weekly chart, we have an inside bar. An inside bar means that we are pausing inside of the dominant trend. If we look here really closely, again, trying to make it obvious, we have a head and shoulders pattern. But I know some people are perfect technicians, so let me show you what I see on the chart, right? I'm not Nostradamus, but I can read a chart. High. Let me show you what I see here. Let's lock the tool. High. And let's go to the arrow. What do we have? Lower high, lower high, lower high. Higher high, bearish engulfing. Lower high, lower high, lower high. The keyword there is lower. So what are we doing? We're not doing anything offensive. Remember, if you want to score points in any sport, defense is not good enough. And right now, they can't even form offense. So these lower lows are as notable as the lower highs. Please also note this candle right here. It's a bearish engulfing candle, right? Bearish engulfing, and then lower high, and then lower high, and then lower high, and now currently lower high. So this pause or this inside bar is inside of a very bearish pattern. So it's a breather. That's what the note says here. Remember, an inside bar break is likely going to give a short-term direction. And if we can't do it this week, or taking that pause after the relief rally and the massive volume, honestly, we're probably not going to do it. We had big volume here at the bottom, but that was as we reclaimed these moving averages. We started going up. That's what the green line signifies, an uptrend. Right now, we're likely closer to here, which means, if we want to be prepared for what could happen from here, it's not all that complicated. We have to wait until the close of Monday, the close of the week, and the close of the month. Our goal is to reduce noise and focus on levels. So that's it, right? There's a lot of supporting evidence, and I can walk you through that right now. But at another high level, you're not going to make very good decisions. As you continue to get stressed out, if the more decisions you make, the quality is going to go down, right? Quantity and quality. So, what I would encourage you to do right now is to learn how to make a plan for what? How to get ready for a crash. Hey, if the crash doesn't happen, it's the same thing as getting prepared for your house to burn down. It's called buying insurance. You hope it never happens. You don't want to think about it every day, but it's nice to have that plan. So, if you expect the best, are prepared for the worst, and ready for a surprise, it'll be very hard to disappoint you. Why? Because we always want the best case scenario. However, if we are legitimately prepared for the worst case scenario, it will be very difficult for us to be disappointed. The news I'm going to show you is not terribly delightful, right? It's not sunshine and rainbows today, but there's a reason why we're seeing S&P targets get cut at the fastest rate going back to 2020. And we all know what happened in 2020. I don't want to get in trouble for saying the word. So going forward, that's all we can do. I'm prepared for what can happen from here. The worst case scenario keeps seeming to get worse, but I'm learning to manage my expectations. So anything better, it should be palatable, right? Or a win. I'm calling that a win. So with these two nations currently fighting out a trade war, less notable concerns are happening in more than one area, like cyberspace, shipyards, and near Taiwan. So right now, the US is acting like an emerging market. Invest accordingly. That's what I want to walk you through today. Because all they're really asking for is a little bit of respect. And I don't think that's going to happen. So let's go back to a simpler time of when the king, long live the king. Because that's what it seems like right now, right? The joke is that they want some respect, which they're not going to get because they're being called peasants. Here's a couple of pictures of peasants. And, right, a nice simpler time. Look how happy they were, right? The king's got his way. These guys are doing all the work. And, right, back to the good old days. So this weekend, what I want to walk you through is that we're not going to make too many good decisions. So the important decisions are making sure we understand what is going to break the technical chart, but also fundamentally what is happening out there. All right, so before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. One more quick chart here just to get it out of the way is going to be this 10-year node. And the reason why I'm pointing to it here is because, look, we closed at 4.33. Why does that number matter? Well, I'm going all the way back in time to show you why. It's a pivot. It's a pivot to what? Our previous all-time high here. So what we're hoping for is the W. The W led to a massive decline in the 10-year note, which meant that interest rates went down, and right, the debt on the U.S. Government was affordable. So if we're going to repeat this pattern, we have to stop going up. And as of right now, we've not stopped going up. We're pausing or backtesting the 50 MA, which is actually pretty bullish because as we look here to a higher time frame, let's actually hide that. What does it show us? Well, this is very scary to me. When I point back to the 1990s, this was not good. Again, last weekend, I showed you that we have a golden cross. We have an uptrend. What used to be acting as resistance is acting as support, and we're bullish off a pivot. This is pretty bad. If this line keeps going higher, Trump might make a critical error because this is actually what's driving his decision-making today. And within 3 years, there's going to be a heart attack. So that's within this next president. Okay, cool. So we have our notes. We got our plan. Let's find the supporting evidence without thinking too hard this week. There's a couple of earnings that'll really matter. Boeing, Tesla, and Google. Those are the key ones I'm looking at. Tesla is expected to miss. This is not a guarantee. It is a whisper. 31 over 35 is bad. What are they going to forecast for the future? Are they going to pull their guidance? Because right now they are delaying production of their cheaper EV because they're just not sure what they're going to do. And China's now offering low-cost satellites to the Belt and Road countries. They're coming for you, Elon. Looking over here to Boeing, they're also going to miss negative 1.7 or a loss of $1.70 when the consensus is 1.54. American Airlines is going to beat, but it's still a loss, right? They're losing money right now. Looking over to Intel, they're expected to be at zero. They're also going to lose money. Looking here to Google, also expecting a miss. So missing's not terrible because remember, the stock market is a future discount mechanism. But China has said, we don't want those Boeing planes no more, right? You can keep them. And Russia's like, no problem, we'll take them. They're asking for them. They want to use frozen assets for that. It seems like they're playing the game here. But someone might be coming for them. Female engineer leads China's challenge to Boeing and Airbus. China's pretty big. Are they going to decide to make these? Think that's going to matter this week? All right, moving on to another issue. If this is only going to get resumed next year, like Jerome Powell says, when the average American cannot afford a $1,000 emergency expense, or the average worker, again, 63% of workers, cannot afford an emergency $500 expense, these tariffs are going to squeeze you because they're supposed to add $4,200 in tariffs per year. I don't know about you, but like 4,200 is like a lot more than 1,000 and a lot more than 500. So Americans are going to feel the pinch at some point, and companies are too. Not going to talk about this too much because we already did. I think it was 180 companies, 188. 188 companies filed for bankruptcy in the first 3 months of the year. Uh-oh. I'm not going to talk about this much more because we already did that. A rising interest rate environment is not good because zombie companies, consumers, and countries, they're all going to have a hard time. So if the US is acting like an emerging market, we need to invest accordingly. So please don't make the mistake of thinking this is all about tariffs. What Ray Dalio tells us is that we are seeing a classic breakdown of the major monetary, political, and geopolitical orders. This sort of breakdown does not happen frequently. It's a once in a lifetime. So we will not have seen it before, but they have happened many times in the last 500 years, as I briefly showed you already. Here are the 5 big forces according to Ray Dalio: debt, credit, and money and economic cycles, internal and external order, and then the changing world order, right? Internal fighting, debt, credit, and money. I'm not going to talk about all that today. He also suggests we're likely going into a recession if we are not already there. He also tells us how to fix the problem. So it's not like we can't fix this. It's just that what often happens, what's happened every time so far, is that we go into a contraction, interest rates go to zero, they start printing money to balance the debt, and we go into a deleveraging. What's a deleveraging? It's how you manage to cut the debt. So there's 4 ways you can do that here, right? Print money, wealth retransfer, cut debt, or cut spending. The US prefers to print money. That's what they're trying to ask Jerome Powell to do right now. So this is where we currently have all 5 stages of the war, but we also have a roadmap for how we can deal with this. And we're going to look at charts to make sure we're very clear on what to do from here. We want to make sure we're looking for evidence. How do I know that I'm right? Not how do I think I'm right? Thinking you're right is not going to make you money. If we're really changing the monetary order, that means everything's changing. Monetary order means money. That means the US being at the center of the universe. So going all the way back to a 2015 document here, this is made in China, 2015. If you can't read it, I can't either. But here's what they tell us. It's a notice to state councils issuing on made in China. I went through this weekend. Man, it's pretty impressive what they've been able to do in 10 years. The US used to be the leader. So look here. They want to make the auto industry into 2025. Well, what are we fighting about right now? Autos. Where? All around the world. Look, these were the areas where they wanted to go after. Markets, enterprise strategy, and the 10 key sectors they wanted to go after. They were successful on a few so far this year. Sorry, in the last 10 years. Ships, railway, and EVs. Look, this document's from 2018, and the important parts here are highlighted. What do they tell us? In any case, most of China's companies are not prepared for such a deep and sudden change. What does that mean? Only a few select companies will be able to meet the government's targets, and they're going to expand internationally. This is going to cause concerns for countries like the EU, Germany, and the US. For the US, the fear is that American companies will lose their competitive advantage because of MIC 2015. So look, back in 2018, Trump was already talking about tariffs, whether you knew it or not. And I didn't even really know this. He was also looking to impose 25% tariffs on Chinese companies for IP theft. Well, he's just doing what he started in 2018. Maybe it's a little bit more sobering than it was maybe a month or 2 ago. Here's a summary. They strive to be a global powerhouse in high-tech industries. Man, so far they're winning. The dragon is hard to hold in. So contain, right? Contain Chinese tech. 1 second here. Let me find that article. Here we go. Why is the U.S. efforts to contain Xi's tech supremacy are faltering? The rest of the world, that's right, the world outside the U.S. is increasingly driving Chinese EVs, scrolling the web on Chinese smartphones, and powering their homes with Chinese panels. These are the key areas, right? The ones they got ahead of, the ones they're trying to get ahead of. And that's the update, like 10 years later. So they want to see a fully integrated into the global manufacturing chain. And this really comes down to their brick and road initiative. They also show us here countries that are potentially impacted from this report, potential exposure for select countries, and the Made in China 2025. You can see it right here: South Korea, Germany, Japan, US, France, Italy, UK. Aren't that all the countries really making noise right now? They even have KPIs 2015 to 2025 in innovation capacity, quality and value, IT and industry integration, and green industry. Oh, I think I get it. Here's a video going back to 2018, the same date as, and this is behind the scenes of BYD Auto, China's biggest EV factory. What do they tell us? Well, right here, when I pause the video, it says, as part of China's as part of its Made in China 2025, China wants to be a global leader in the electric vehicle industry. Whoa, look at this brick and road initiative here. If you look down at the bottom here, important BRI hubs, ports, railways, and multimodal. We can see one right here in Chanca. I think I'm pronouncing that right. Chanque. That's over in Peru. There's Panama. In case you didn't know, they're talking about that a lot. And looking over here, Valencia is in Spain. Genoa, I think, is in Italy. Istanbul's in Turkey. Then we know we have Dubai. That's an important one, right? We got Gouda. That's over in, I think that's in, I don't even know, to be honest. I think it's in India. Chittagong, I don't know. These are lots of places I don't know. And it also shows us here who the biggest trading partner is. China's the number one. So if it's dark green, number one trading partner. Look, it's most of the world. They're either number one or they're number two. So these ports right here seem really important. And this is basically where BYD's all set up. So overland route to the Belt and Road Initiative, and then the maritime one. Oh, Singapore, Indonesia, India, Kenya, Italy, right? Spain. Oh, current RBI or BRI members. I think that Brazil's going to join here shortly. Man, it's most of the world. Look, it's almost all of the world. Please also note the bulk of the projects they've been doing. They account for the top 5 markets, which are Pakistan, Indonesia, Vietnam, Saudi Arabia, and Malaysia. Among these nations, Saudi Arabia is projected to be the highest demand. They're talking about solar specifically. So it's interesting that India's Modi is going to visit Saudi Arabia next week or this week. Look at this headline here too. Peru port could be the answer for U.S. fees. Hong Kong expert. And they're also offering those satellites. Right? The Made in China 2025 plan outlines the first 10 years of what they call a multi-decade strategy to become a global manufacturing powerhouse. And now they've laid the groundwork for Xi to go travel to Japan, over to South Korea, because they need to convene a rare central conference on neighboring diplomacy, right? Immediate periphery to ensure both economic and national security. That's all those trading partners I just showed you. Let's read further. All members of the Politburo Standing Committee of the Chinese Communist Party, China's top diplomatic body, they're building a community with a shared future of neighboring countries. They're also talking about an Asian security model. They're talking about Asian countries, thereby consolidating their backyard as a top response to the trade war. What's also interesting is that if we look here, he doesn't want to go over to the EU, right? Plan suggests that a second meeting between the EU and China will take place where? In China's capital, despite the fact that they don't want to go. They're supposed to be rotating. Xi's reluctant to travel. So you guys either come to see him or he's not going to go. And China, Japan, and South Korea are going to jointly respond to U.S. tariffs. I kind of think I know what's happening here. This report, again, the Made in China report, just got a recent update too. So they're being told by the EU business body to overhaul its industrial policy. Why? Because they can't compete anymore. That's why they got all these tariffs. So like I said, they're going to be flying over there. And this ChatGPT update, I'm just going to show you this one slide here because I don't want to drag the video out for too much longer. Where are we currently in this 12 round fight, 13 round fight? Round 1, that was January. Round 2, yeah, there were fireworks. Round 3, it's a fight. Into round 4, mid to late April. What's going to happen? The crowd, market, allies, global businesses are getting anxious, right? Trump's blows are landing fast, but Xi isn't flinching. He's going and gathering allies right now. This sounds like it's a very familiar policy, and it is. If we go to this article here, talks about how Bessent has a grand encircling plan for China. If this sounds familiar, it's because it is. The Obama administration actually did this. It was the TPP, or the Trans-Pacific Partnership. Trump abandoned this in 2017, shortly after taking office. So the exact countries we're going after right now, they didn't wait. They saw the threat, and they're gathering here. So it talks about all these places he's going to go. He's traveling all around the world now, right? He's jet setting. It's going to be in Tokyo, South Korea. 10th trilateral meeting between South Korea, China, and Japan in the first half of the year. It already happened. They're looking to strengthen their diplomatic on a united front. Yeah, I would agree. It's kind of what they need to do here. Oops. I close everything out. What happened here? So these guys do not quite seem to understand who their opponent is. I know who their opponent is. They're smart. They're sharp. And right now, the U.S. stock market is suffering. Do you really think the announcement of DeepSeek was a coincidence? Let's go to NVIDIA for a minute. Why? Very obvious to see the day on the charts, right? Don't do it right on the January 20th, but man, shortly after. Why? Jan 24, boop. That was the top. Whether you realize it or not, I've been telling the story consistently since then. We're pointing down. This is NVIDIA. I don't want to beat the company up. I actually own it. But as of right now, that's the reason why we topped out. So round 1, round 2, round 3, round 4. It's a 13-round fight. It could go all the way till the end of next year. So because there's not very much economic data next week, we have to look for what could actually move the market. That could be those earnings. But then also, finally, we'll have a look here to the key summaries. Let's go back to the notes and a few more quick charts. All right. What a great week ahead of us. More red. That's right. Looking here to our key dates. Modi's going to visit to Saudi Arabia. Tesla earnings on Tuesday. Boeing earnings on Wednesday. Google and Intel on Thursday. IMF meeting in Washington starting on Monday. That's going to be a week-long event. Look for headlines on that. And there's going to be a G20 conference over in Washington, D.C. from 23 to 24. And then we got a Canadian election after that. Man, look at all these dates I got through here from the weekend too. Italian elections, Russia's going to visit, G7 meeting, TikTok deadline, Brazil hosts BRICS. There's a lot going on, man. It's going to be a busy year. So that's why when Jerome Powell says might have to punt until next year or defer till next year, we have to be ready for that too. So this is where we're going to look at simple charts. We're going to go to monthly timeframes. Why? Because when in doubt, zoom out. When we look at the monthly, it might still be a little bit too noisy for people. Let's have a look a little bit closer here. We're below support. If we're below support, it's a red light. I hope you know what that means. So if we're below 547, we're bearish. By the way, the notes incorporate that. So by the end of the week, we want to break that inside bar bullish. How do we do that? We got to get above 544, 545. This week's high is 544.28. We have to get above that, but it's really back above 547. So I think I made a mistake there. It should be 548. How are we going to get to 548 if we can't get to 545? And remember, it's not like I'm asking the chart for all that much. I'm asking for a higher high. Since Liberation Day, we've been unable to make a higher high. Liberation Day led to a bearish engulfing weekly candle. Again, has the word bearish in it. It's maybe why you see the word bearish until proven otherwise, bearish until proven otherwise, and bearish until proven otherwise for the weekly, the monthly, and the daily. So high, lower high, lower high, lower high. If we make a higher high, it's not a pattern yet. We need one more to form higher highs with an S. Otherwise, man, sell the riff. Got to be ready for it. So looking at the monthly, very easy to see that until we fix the weekly, the monthly is busted. It's broken. Volume is very heavy too. Only halfway through the month. Let's make it even simpler though. People seem to get confused. Let's go to a 3-month candle. Look, bearish engulfing quarterly candle. How do we fix that one? It's the exact same way we fix other ones. We got to close the candle out and we got to get back above. We got to form low, lower low, higher low, higher low, higher low, higher low. If we're doing this one right here, this is months. This is literally until the end of the year. Q2, Q2, Q3, Q4. Where's Q4? Lower than we are right now. If we're tracking roughly here, look, we're going to go lower. I wish we weren't. If we're tracking roughly right here, man, we're going back down to the low. We're going to go lower, maybe a little bit lower, right? Shake and bake, baby. Another 100 points. I don't want us to go there, but I don't see how we're not going to do it. Lastly, zooming out to an annual time frame, which we also have here in our notes, right? They're right here. Monthly notes, we're neutral. Sorry, where's the annual? Annual. This is what it looked like at the beginning of the year. We were bullish over 610, or that is good. Under 466 is bad. In between, we're stuck. We're in a yellow light. What do you do at a yellow light? You exercise caution. So I don't look at this chart frequently, but I know where it is. Also, look here. High, higher low. So it's a fail breakup, but technically it's holding up. So if you're bullish, like please note, 466 is really important. It's also a dead cat bounce off our previous tops right here. This is important because, again, if we look back at history, it's not like these things haven't happened. Cycles have happened before. If we go to SPX, we look at a 12-month chart, it's pretty sobering to see that the market might have existed for longer than you've been trading. The stock market as SPX goes all the way back to the 1870s. 1870s, yes. And look what happens when we start getting red years. It's either a one and done, or we go for a few, or sideways. So when in doubt, zoom out and make sure the charts you're looking at are adding value for you. Because the US 10-year note on the monthly here, what do we have? Like I don't like looking at it because I know. Bullish engulfing weekly candle, lower low, higher low, not currently over the high, but it is engulfing. So what does that mean? Defer to the dominant chart. This is what made Trump blank. It's going up more. So if when it went up, he blanked, and it's going to go up more, you should be worried. You should make a plan. Let's do that right now if you haven't already. Why? If you're still watching after 26 videos, you made a good decision to watch until now. Now it's time to make a plan. All right, how to get ready for a crash. I'm going to read it to you one more time, and then I'm going to leave you with one key takeaway. Let me just make sure I got my thing prepared. Already went through all that. Perfect. All right, so how to get ready for a crash. It's, again, like I said, it's like fire insurance. Hope you never need it. You're happy to pay the premium and never have to cash it in. Here's how you make a plan. Expect the best. Expect that we're going to bounce off that annual chart. Expect that I'm wrong, that we're not going to go lower, that the S&P 500 has hit its annual support and it's going to bounce. But I don't know about you, just because I go to the, go get anything in life. I want a job. I want to go get food for a perfect price. It doesn't mean just because I want it, it's what I get. Right? It's called being an adult. Sometimes we don't get what we want. So if this is going to hold, we're only going to know after the end of the year closes out. Are you ready to hold on until the end of the year and hope it works out? Or at what point do you know you're wrong? Remember, if you're willing to wait now until the end of the year, what if we form a big red month? You're going to find out you're wrong all the way down here. The reason why we look at shorter time frames is because before we close out an annual chart, we get 4 quarterly charts. And the quarterly chart is a bearish engulfer and currently below the low. So before we form the quarterly, we form 3 monthly candles. We can see how that quarterly and annual chart is forming before it's formed. It's just like trying to forecast the weather. If the clouds are really far away and they're dark and black, by the time they get to you, there'll be rain. There's not going to be rain today, but you know rain is coming tomorrow. So looking here on the monthly chart, we have this topping pattern. It played out. Now we have the lower lows. It's bearish. So how do we fix the monthly? We have to go to the weekly. It's that simple. Before we fix the weekly, we have to fix the daily. And the exact same pattern is here. It's an inside bar. So what do? Man, we wait. We got death on the chart. We're pointing down. We have an inside bar or a breather as we're going lower. And I don't see much of a reprieve until potentially a few months, right? I wish it was sooner. The 90 days seems like it's going to be seen out, right? We're going to have to wait all the way till the end because he initiated new tariffs, which could take 6 months, right? That's those critical minerals. That's if we don't even get another tit for tat. Ooh, right? Okay. So expect the best. Expect we're going to go back up. Be prepared to be wrong. Be prepared for the worst. 500 years of history, you don't even know what happened. You weren't alive like me. Be ready for a surprise. We could get a toilet tweet today, tomorrow, could go down, could go up. Man, I don't know. I'm prepared for it, though. I've done the sweating early. I'll show you one more quick thing here, too, because if you're still watching, like I said, what's been really important for me is to avoid what I'm going to regret more. Of course, I'm going to regret both. But for me, I almost always fall into bucket number 1. I buy and it goes lower, or I don't sell and it goes lower. So what I try to do is to avoid what I'm going to regret more. Of course, I'm going to regret not buying and it goes higher or selling and it goes higher. But this is what makes me sleep well at night. Better than if this happens. So when in doubt, I try to avoid number one because that is how I'm able to be calm, cool, collected as the times to continue to get more turbulent. I've made my decisions. So as we can go through time, I don't have to decide the things that are normally difficult for me. Lastly, let's go back to the plan here. All right, how to get ready for a crash, right? What a nice, beautiful weekend video. Be ready for the surprise. So if we are actually prepared, we always want the best case scenario. However, if we are legitimately prepared, and if you're not legitimately prepared after watching this video, maybe you are now. The worst case scenario was like what's happened in the last 500 years. We've not seen this in our lifetime. It will be difficult for you to be disappointed. Again, remember, anything better than the worst case scenario should be palatable. Palatable means you can grow a pair and grow, right? You can suck it up and move on. Yes, it means you're probably going to lose more money. Your assets are going to go down. Are they going to fix things? Don't bet against America, right? I also learned that. So just because I haven't seen it before, there's a lot of things I haven't seen before. America's always come up on top, but I'm going to respect my plan. That's what I want to leave you with here. Lastly, if you don't know where to start, it means you've probably planned too little and you have too much going on, too many names in your portfolio. Go Google this video here on YouTube. Breakdown is holy grail. It's like 5 minutes. So keep it simple. Because remember, if this is a reprieve on the daily, a reprieve on the weekly, and the monthly is bearish, that might be it. That might be the bounce. Maybe we don't get back up to here. Maybe we leg back down closer to the 200 MA. And if you're going to say, I shoulda, woulda, coulda done something up here, do it now. Make a plan. There's no time like the present. Expect you're going to be right, but what if you're wrong? What if there's a 1% chance, a 5% chance, a 10% chance? And then lastly, if you don't know what to do, and it is or is not the end of the world, maybe you want to come trade with me because I try to make things as simple as possible after I sign off YouTube. So our sale's on for 10 more days or until the end of the month. You can come trade with me. You can get access to both of my accounts, private education, meaning asking me questions, actually getting on a Zoom call, and one-on-one help from me during 9 to 5, Monday to Friday. If that interests you, you can go to theelgo.com. And if not, just subscribe to the channel and I will keep you up to date as best I can. Thanks so much.